Welcome to the latest Motley Fool scoreboard. I'm Anand Chakavolu. We've got longtime fools, Tim Byers and Tim White, giving a 1 to 10 rating to the company that has clearly made its money on much more than graphing calculators and Hunt the Wumpus for the TI-99. It's Texas Instruments, ticker symbol TXN. Tim Byers, how do you rate the strength of Texas Instruments business? Keep in mind competition and industry. A 10 is invincible and a 1 is hopeless.
I'll say 8.3. Texas Instruments is far and away the leader in producing analog chips for industrial equipment that you might find on a factory floor, or for those of us of a certain age, you can see my white hair, in your calculator. Need for this kind of technology results in tens of billions of dollars in annual revenue today, and demand is not going away anytime soon. This is essential business, Anand.
I'll say 7.5. Along with competitor analog devices, TI makes thousands of different chips that translate real-world signals into the electronic realm. This focus makes them popular in the manufacturing and automotive industries. They also make microcontrollers based on the ARM architecture so that you can run sophisticated programs based on those real-world inputs. I agree they aren't going anywhere, but their products often have slim profit margins, and they are out of the spotlight for most of the cutting-edge technology. There's also concern that their large customers in China may soon be choosing products from Chinese firms instead.
Usually I average the scores largely in my head for categories, but I may or may not have used the TI calculator to get these decimal brother numbers, into the right averages. Tim Byers, how do you rate Texas Instruments management? 10 is Warren Buffett, 1 is Homer Simpson.
I'm going to say 7.1. CEO Haviv Alan has a 25-year history with the company, serving in a wide variety of roles. He also owns over $6 million worth of stock and has been sparing with stock sales. So this is a good business that a veteran can run well. And I think he's perfect for the role.
I'm going to go 7.5. The management is tenured, as Tim said, and TI has a strong track record of developing internal leaders, and they have an impressive 4.2 out of 5 on Glassdoor with over 6,000 reviews.
Right. Financials, Tim Byers. A 10 is a fortress, a 1 is yikes.
So this can't be any less than 7.2. Despite the cyclical nature of the business, Texas Instruments still managed to produce over $1 billion in free cash flow over the trailing 12 months. That's a lot. Net margin has declined in recent years, but still staggeringly, it remains above 30%. And I think that is at least in some part due to some of the more advanced projects that Tim is right to call out, like they're working with ARM. But overall, just a solid, steady business that is a cash generator, and I expect it to continue to be.
I will say 7.5, slightly above Tim's 7.2. This company has billions on its balance sheet and moderate debt in comparison. Like Tim said, they operate in a very cyclical industry, but they have been successfully doing so for a very long time. Their cash flow return on investment, the CFROI, is a very high 20%, and their return on invested capital nearly the same. This is well above average.
Those are tremendous numbers. 30% net margins, ROIC of 20%. Those are amazing. Let's see how the stock's going to do, though, because I assume other people understand this too in the market. So, Tim White, how well will Texas Instruments stock do over the next 5 years? And how safe is it, keeping in mind a 10 is a sure thing, a 1 is a lottery ticket?
Sure, I'll go 5 to 10%. In the last 5 years, the stock's really been on a tear, and I hope that the AI-driven rise of robots, which definitely need that sort of real-world to digital translation technology, will be a very strong market for TI. Safety-wise, I'll go with an 8. They tend to get swept up in the general chip industry volatility, and domestic Chinese competition could have a significant impact over the next few years, but this company's not going anywhere.
Yeah, I'll go with 5 to 10%, fueled by a dividend that yields 2.8% presently, and which has grown per share payouts by 11% annually over the last 5 years. So very good there, good use of capital. Cyclicality and valuation could always harm the returns, but the dividend provides a meaningful safety net. On safety, just the overall safety of the business, I think Texas Instruments has to be at least an 8. This is a well-established, predictable business, so I'm going to agree with Tim there.
In the interest of time, we'll skip Armchair CEO and go straight to everyone's favorite. Top it. Tim White, is there a company in Texas Instruments space that you like better?
Well, I think it depends on how specific a space you look at. In the world of analog chips, there's definitely no one better. In the chip industry as a whole, you could probably go big and go NVIDIA or AMD, but I think Texas Instruments is a great player in that analog devices space.
Yeah, I'm going to say a flat no here. The valuations for peer companies are about in line with where Texas Instruments is today. It's in a niche part of the market. The analog chipsets are super important, particularly for bridging that physical and digital world, as Tim was talking about here. So, no, this is the standard for me.
Well, thank you to both the Tims. They've given Texas Instruments an overall score of 7.1 out of 10. Short of that 8.0 that would force me to own shares, the low return expectations drag down the score. But that changes if you see a dip in the stock. Seems certainly worth folks' radars. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Tesla. Till then, Fool on.